Okay, we're going to have a look at an incomplete records question today. And in particular, we're going to look at the 2015 incomplete records question. It's question 7 on the 2015 exam paper. The question is what we would call a cash book incomplete record or a forward incomplete record, where we are going to do the trading profit and loss account first, part A, and then the balance sheet secondly, part B. There's also 8 marks of theory at the end of the question. So um, the workings, the way I've taught you to do this in class, and we're revising it here, is that we have 5 preliminary workings or first workings that we have to do, all with an individual purchase of getting relevant numbers. And then after that, we go seeking out other workings, and we'll follow that procedure. But let's start off with the first 5. And working number 1 in the top left, I have the workings written out here. I'm just going to explain what I'm doing with them. But working number 1 in the top left here is opening capital. So essentially, this is looking at the first sentence of the question, and it is trying to find a missing goodwill number, which has not been given to you. In this case, it's 27,700. So the question says, on the first day of January 2014, A. Murphy purchased a business for €220,000. Now, if he puts €220,000 into buying a business, that is his capital invested, and that's going to be in his balance sheet, 220,000. However, what did he buy? Well, we list off all of the assets from the top sentence: premises, stock, debtors, 3 months insurance prepaid, and €400 of cash is also an asset. We take away those 2 liabilities, things which came with the company, even though he possibly would prefer if they didn't. Creditors of 22,500 and wages due of 1,800. Now, we can total the creditors and the wages due to get 24,300. Now, working backwards, we can see that 220,000 something, take away 24,300 gives you 220. So therefore, working backwards, we know that this number must be 244,300. These 5 do not add up to that. So therefore, the difference is a missing asset, which is the reason that he has overpaid. Why has he paid 220,000 for a company that is worth less? Because perhaps of an intangible fixed asset like a good client base, maybe a good reputation or a good brand. In this case, 27,700 is the intangible goodwill factor, and that now makes working number 1 work, and that's an intangible asset. So we'll use our capital in the finance by section. We'll use our goodwill in the intangible fixed assets. Working number 1 completed. Working number 2 is a cash account. I'm just going to highlight it here for us. Now, the interesting thing about this cash account and all these cash accounts is that they only give you one side. In fact, this is the number they don't give cash sales. But they do give you the amounts of cash payments. So it says the lodgements on the credit side, cash payments are 110,000. We know where that's coming from there from the question. General expenses are 45,800. Purchases are 86,200. There is a drawings figure here, and that is the first paragraph beneath the bank lodgements, where it says that Murphy took cash of 120 per week for household expenses. Well, that is money out of the cash account. €120 by 52 weeks is 6,240. And then where do we get this 600? Well, the balance, we are told at the end of the question, you have to go all the way down to the bottom, and it tells you that at the end of the year, Murphy is going to have €600 cash. That's a closing balance. So therefore, you put that 600 here, above the lines on the smaller side, and below the lines on the bigger side. It must be a balance on the debit side, because you cannot have credit cash. Cash has to be a debit balance. You either have 600 cash or you have 0. Now, then what you do is you take these 5 numbers and you total them. And this side must equal this side. So if you total these and you take away the 400 from here, the difference is going to be your cash sales, which in this case is 248,440. That's how you get that cash sales number. On we go to our third working, which is the bank. Now, some of this has been given to you straightforward, so therefore we can put in the bank lodgements of 34,000 from debtors, people who owed us money and paid us. The cash of 110,000, which is a direct credit here. We took money out of the safe and we lodged it into the bank account. And dividends. Now that dividends there of 4,000, it may be worth us putting beside that a little C, because that is going to be an introduction of capital. That is money that Mr. Murphy put into the company as an introduction of capital. It's going to be added on to this 220,000 over here as extra capital. Then on the credit or money outside, we have these 1, 2, 3, 4, 5, 6. Those are given to you directly in the question. Bank payments, and you can list them off there and hyphenate them or shorten them a little bit. Now, in green here, I have put some of the new information that needs to be recorded. If you look at the second large paragraph underneath where I've just referred to drawings, it says Murphy borrowed 120,000 on the first day of September 2014, part of which was used to purchase an adjoining showroom costing 90,000. The remainder was used to purchase furniture. You put the loan on the money inside of your bank, 120,000, and then what did you spend that money on? Well, you spent 90,000 of it on a new premises, and the remainder, which is 30,000, you spent on another fixed asset called furniture. Now, reading that question a little bit, that paragraph a little bit further, it says it was agreed that Murphy would pay interest on the last day of each month. We'll talk about the interest in a moment. But the capital sum was to be repaid in the year 2022, which is a way distant in the future. So to provide for this, the bank is going to transfer 1,250 on the last day of each month from the bank account into an investment fund. And they start that at the end of September 2014. So therefore, in the year 2014, which we are accounting for, they're going to have that, they're going to make 4 of those payments: September, October, November, and December. So that is 1250, this number here, 1250 by 4 months, which gives you an investment fund of 5,000 euro. And that's where you get that number from. And that is money leaving the bank account. And we'll see in a moment where that money goes to, but that's going to be a financial fixed asset. When you have got in the 4 green new piece of information, along with all the basic information given to you, you can balance there and you will get a balance of 50,600, which will be a current asset in your accounts. Of course, cash is also a current asset if we wish to include that over there. Now we do working 4. Working 4 is going to look at getting an actual sales number. Now here, this is fairly straightforward. You have your debtors, which you got from over here, or from the question, the bank payments, or sorry, the bank lodgements, 34,000. You subtract debtors at the start of the year, which is in the top sentence, this number here in the top sentence. Because of course, debtors at the start of the year, on the first day of January, must refer to things that we sold last year. You add on debtors at the end of the year because that must refer to things that we sold this year. So therefore it should be included. This is the accruals concept in action here. And that will give you your actual credit sales, which is 36,400. To that, you add on your cash sales of 248,440. Where do you get that from? From your cash account. And that will give you your total sales number of 284,840. And 4. And working 5 is a very similar process. You take your creditors, which is from here, 42,100. You take away the creditors at the start of the year, irrelevant to this year. You add on the creditors at the end of the year to get your credit purchases. You add on your cash purchases from your cash account to get this total purchases. There's one extra piece of information here. It says in the first paragraph under the bank information that Stock goods up to the value of 100 per week were taken out as drawings. So that is 5,200. That's 52 weeks at 100. So therefore our purchases are actually 133,200. Those 5 workings are the first 5 workings you tackle on any incomplete records question. It's only from there forward that we have to seek out what else needs to be done. And I'm going to go down to here to find some of these. So we're going to have a look at the top sentence and see what else is due or prepaid up here. And the first thing we find is that there is in the top sentence insurance prepaid of 1,200. So therefore we must do an insurance working 5 insurance. You take the number for insurance from the bank, 3,800, but you add on an amount prepaid at the start because it was paid last year, but for the year 2014, prepaid into this year, then it is relevant. And then you take out the prepayment at the end of the year. The question does not tell you there's an amount prepaid at the end of the year, but it does tell you that this is a 12-month payment. And therefore, if there was 3 months prepaid at the start, there must be 3 months prepaid at the end. Basically, that insurance is for the year 1st of April to the 1st of April next year. So therefore, there are 3 months prepaid. How do you get that 950? This is 3,800 divided by 12, multiplied by 3, which gives you that. The profit and loss figure for the year of insurance is 4,050. That's an expense. Again, the principle of the accruals concept is what we're applying here. Anything else due or prepaid in the top sentence? Well, very much so. General expenses. We have wages due. We don't have a specific expense for wages, so we're going to include it under general expenses. And an amount due at the start of the year, we subtract because it was obviously for last year. So therefore, this year's general expenses are actually only 44,000. Anything else due in the top sentence? No. So therefore, we go to the bottom sentence, and we'll find an electricity due amount, which leads us to a light and heat working. The light and heat working, well, you take your original number, you add on the electricity due at the end of the year. We know about these rules. An amount due at the end of the year we add because it is for the current 2014 year, even though we haven't paid it yet. So the actual electricity used is 7,180. And the drawings paragraph, which is the paragraph after the loan, tells us that there is 25% drawings. It says 25% of the light and heat should be attributed to the private section of the premises. So you take 25% off that and you'll be left with your expense of 5,385. Then we have one more thing to do in the bottom sentence. We have our investment fund, which earns interest of €30. Now we have already worked out that the investment fund was €5,000. That was 1,250 by 4 months. But you add on the interest received, and that will give you 5,030. That's a financial fixed asset. So therefore, if you want to put a fixed asset, and this 30 itself is an income, because it is interest received. Okay. Now we go and we'll have a look at what else needs to be done. Now I'm going to proceed on to working number 9, which is about loan interest. And this brings us back to the drawings paragraph where it says 20% of interest payable. And therefore that kind of refers us back to the loan paragraph where we have to look again. We skipped over the interest a few minutes ago. So I'm just going to remind you about the loan. The loan is for 120,000. It says that Murphy would pay interest of 5% per annum on the last day of each month. And it was borrowed on the first day of September. So therefore the full interest should be €2,000. That is 120 by 5% by 4/12, the last 4 months of the year. In your bank, we have been told that you have paid 1,500, so therefore the loan interest due is 500, and that is a current liability. I'm just going to go back up to here and work horizontally. This would have been your expense, this 2,000, but for the fact that there is drawings of 20% on all interest, so you have to take off the drawings of 20%, and that will give you your expense profit and loss expense is actually 1,600. Of course, you still need to pay the full 2,000. It's just that you're allocating 20% of that to the household and the remaining 80% to the business expense. That drawings of interest, well, that leads us on to the last drawings, which is a straightforward enough little one. It's 25% of furniture. So you do your furniture, which we bought for 30,000. It's saying that 1/4 of that we're keeping for our own house. So you take that out, and therefore 3/4 or 22,500 becomes a fixed asset. And that is all of the loan, that is all of the amounts due and prepaid, that is all of the drawings dealt with. There's only one extra paragraph here. The penultimate or the second last paragraph in the question says about a sale which has not been recorded. Let me talk to you about this here. It says at the end of the year 2014, goods with a sales value of 6,000 which have been sold on credit at a markup of 20% have not been recorded in the books. So this is a sale which has happened but has not been recorded. Therefore, we need to record it. The invoice issued to the debtor on the same day, so we have billed the person, and the goods were still in the warehouse and are included in closing stock, which they should not be because we have sold them. They should be taken out of closing stock. Now, first off, you need to figure out what the selling price and the cost price are. The selling price, we're told, is €6,000. And we know that this is 120% of the cost price because there's a 20% markup on cost. So therefore, working backwards, the cost price is going to be 5,000. Now here's our instructions. We need to add the selling price on to debtors and sales to make an extra sale of 6,000. And we need to subtract the closing stock from, the cost price from closing stock because we need to take it out of closing. Here's the closing stock done. We might as well just look at that right now. You take that €5,000 out of the end of the last sentence question of figure of 16,200, and that simply makes closing stock 11,200. Now let's go back up to working for a moment to our debtors and our sales, where we need to add on 6,000. It's important that you see up here for a moment that debtors and sales, of course, are linked together. So therefore, if you are to say at the end of the year that your debtors are now, we're going to add on 6,000 here, and we're going to add on 6,000 here. But I do want to make it clear to you that by doing it here in the debtors, it automatically increases this anyway when you redo your sum. Now Excel is going to do this automatically for me. But if you make this 26,400, watch how the sales is going to go from 284,840 up to 290,840. So therefore that increase has happened here. You don't need to go and add another 6,000 to it now. By adding 6,000 onto your debtors here, and by recalculating, it will give you an extra 6,000 of sales anyway. So therefore, it's important that you can spot the relationship between those two. The very last working, after we do all of our workings, we have to calculate our drawings, and we can look back and see where all these numbers came from. But stock was the drawings for purchases from working 5, cash from the cash account working 2, the light and heat 17,950 from up here, the interest of 400 from here, and the furniture of 7,500 from working 10, and the whole thing adds together to give you a drawings number of 21135. The workings are the most challenging part of this question because once you've got that done, then we can have a quick look at how to do the set of accounts, but most of this will be straightforward. The sales number, directly from working 4, your opening stock from the question, purchases from working 3. Closing stock did change in that second last working 11, so therefore it's now 11,200. You do your normal procedure to get a gross profit of 151,840. There are 5 expenses: insurance, general expenses, light and heat, the charity, which did not need to be adjusted. You just need to needed to take it from the bank account, and interest itself. The other four, apart from charity, all had an adjustment there. You add on one income to get your net profit of 93,835. Then we can have a look at the balance sheet. Now, the balance sheet, in this question, there was no depreciation, but there could well be. But here, premises 217. Now, that is a combination of the 180,000 from the first day of January and the 90,000 premises that we bought during the year. Our delivery van, 35, that was the one which we purchased during the year from our bank, and our furniture also what we purchased during the year, except we had to take off drawings to get you tangible fixed assets of 327,700. Goodwill from working number 1, and the investment fund from working number 8. Now, the current assets. Well, your closing stock, straightforward, directly from working 11, where we did the subtraction of 5,000. Our debtors also changed from that same working. Look back to the sales working, and in particular look at working 4 in that regard. Now after that we have our bank account, which of course is from working 3. We have our cash, which is from working 2, and we have insurance prepaid, which is from adjustment 5. You total those up to get your 89,750, and then we're going to have a look here at our current liabilities. Creditors, straight from the last sentence of the question. Interest due from the interest working 9, and the electricity due directly from the last question as well. You do your normal procedure here, you take liabilities away from assets, and you will get your working capital. You add it on to get your total net assets. I'm just going to move down a little bit here to show the last little bit. Now, in the finance by section, well, of course, you have the loan first and separate, and that loan is now 120,000. Then you're going to have your capital, which is from working 1, 220,000. The additional capital is anything that Mr. Murphy introduced into the business bank account, which in this case is the dividends that he put in. The net profit from this figure here, 93,835, you take away your drawings from the last working and you get your capital employed of 416,700 to match the total net assets we have. I'll quickly just speak through this accruals concept, and you guys can pause the video to take this down. It says the accruals concept matches expenses and incomes to the specified time period. All expenses incurred or incomes gained in a particular period should be included in the accounts of that period, regardless of when they are paid or received. And I give the example there of electricity due, and I also give an example of insurance prepaid for you to consider.